Welcome to System School for this week, where in this week, we're basically going to cover positions that took place last week, positions that could have taken place, why I did or didn't place a trade, and what we can learn from it. So to start out, first off, the volume in the market last week was pure trash. Okay. Last week was one of those weeks to where you really had to be locked into the market for the majority of the session. And that is just not permissible in my life. Okay. That's just not happening. I'm not looking at the market for the entire duration of New York session. And so for the hours that I am looking at the market, the volume was just trash. Like, even if the risk to reward was there, the take profit was maybe like 300 pips, something like that. Whereas usually my TPs are like 1,000 pips or more for one position. And so it just wasn't ideal. However, last week we did have CPI release. And so that definitely plays a huge part in the market's momentum being slowed down a little bit. So it wasn't nothing that I was unaware of, but also it just sucked. Like, that's just what it boiled down to. It was just a little sucky that the market was really, really slow. And then in addition to that, the volume just wasn't there. So this black vertical line that you guys see was the start of market open last Sunday, May 12th at 5 p.m. And you can see we opened with a lot of consolidation taking place. Now, again, that's not common. This is Sunday evening. The market is just kind of catching up from what happened in the world with the Dow or in America rather, with the Dow from Friday until Sunday. Okay. So there's a lot of consolidation that's taking place. Then let's see what time this was. On Monday morning at 9 a.m. on the 1 hour time frame, we see this bearish engulfing candle. You guys have asked me quite a bit, hey, can I use 180 proof for shorts? And the answer is yes. You can absolutely use 180 proof when you are short in the market. I have tested it and tested it and tested it and tested it again. So yes, the answer is yes. You can absolutely use 180 proof when you are short in the market. And this would have been a great position to enter, especially on the 5-minute time frame, which you guys know that's my entry time frame. Anyhow, I do like to come to the 1 hour for some confluences, but ultimately I am on the 5-minute time frame to get my entries. So right here, we got this bearish engulfing candle. I use my fibs always. There's no trade that I take where I do not use the Fibonacci retracement tool. And if you do not understand the fibs, if you do not know who Leonardo da Fibonacci is, if you do not know where this tool was derived, how to utilize it, how do I maximize it? Where should my take profit and stop loss be when I'm using this tool according to what the market is doing? Then you need the e-resource that is in your dashboard. You already have access to it. Make sure you are utilizing it. The name of that resource has changed a couple of times, but the information in it is so key for you to really, really understand the fibs, why I use them, why I've come to use them, and why I don't place any trade without them. So I'm going to use my short position tool because I want to actually see, like, visually, where's my take profit? Where's my stop loss? I want to make sure that my risk to reward ratio is 1 to 3, no matter what, 1 to 3 at minimum. So I'm going to bring my stop loss to 0.618. And then my take profit is going to be a negative 1.618. You can always hover over it, and that's going to let you know, hey, this trade, if taken, is a 1 to 3 risk to reward ratio. That's what I want at minimum, is a 1 to 3. Well, this trade was given 1 to 3. So if you are somebody who has gotten used to trading on the 1 hour time frame, or if you know that you have the capital to do that, then hey, the 1 hour time frame is great. Speaking of capital, I'm going to release to you guys different futures brokers that I have tested out myself, that I have known to be reputable from other people who may have used them, if they are ones that I have not used yet. That way you guys can obtain the capital. Futures is a capital's game, or a capital gain. Some of these contracts you can't even utilize without a certain amount of money in your pocket. And yes, it sounds a lot like trading forex with certain lot size, where it's like, not enough money, it won't let you enter. That's the exact same thing over here with futures, except these contracts are a lot larger, especially with E-mini Dow. Instead of it being $1 per point that the market moves, it is now $5 per point that the market moves. Anyhow, 1 to 3 risk to reward ratio. That is exactly what we want. So within 1 to 3 hours, you would have come extremely close to take profit. I mean, like super, super, super close. And then after that, we ran into a lot of consolidation. So even on a 5-minute time frame, there would have been multiple trades within these 4 hours that you could have entered for shorts. And then after that, this is still Monday, by the way. We ran all the way into consolidation, all the way into Tuesday. So unless you took some shorts on Monday, right, late morning on Monday, you probably wouldn't have traded any more into Tuesday. I started the trading day, not trading until 9 a.m. So seeing that we were consolidating a lot until 11 or 12 on Tuesday, I still would not have entered any trades. Then we had this huge bullish impulse only for the market to re-enter consolidation. This trade ended up hitting take profit. Ultimately, it just would have taken a while. Let me see. It would have taken where is 21 hours, so almost a full day to hit take profit of 1,600 pips. This is what I mean when I say the volume is low. I have captured 1,600 pips in the market in one single day, in one trading session. And so to know that it took 21 hours to reach 1,600 pips, that is where my bias for saying, hey, the volume is low and it's taken so long to accumulate this large amount of points or this large amount of pips that I know the doubt is usually spewing out. This is just a really slow week. And we got to be okay with that. All right. So again, after this bullish impulse, we re-entered into consolidation all over again. Okay. Only to again then follow through with a bullish impulse. Now, if you are following along on the 1 hour time frame, and this is where you are taking your trades, this is also valid for 180 proof to buy the market, right? We have our starting point down here. Why is that our starting point? Because this is a level of support. The market kept rejecting this area as a level of support. So then we got this bullish impulse, but this is not enough yet to let us know, hey, let's go ahead and buy the market. The market then created another level of support, followed by bullish engulfing candle. At that point, we could have said, hey, let me utilize my Fibonacci retracement tool and see if the market is going to give 1 to 3 on the position that I think is going to happen in the market. At that point, identify my stop loss, same parameters every single time. Identify my take profit. You want to minimize as much of this thought process as you possibly can. There are already enough things going on in our lives as mothers, okay? We already got enough stuff going on. We don't need more things to have to sit around and think about. We got enough going on, all right? We already got to think, what are these kids going to eat for the week? Who needs what this week? Why do they need said thing this week? We already have enough going on. And so because of that, day trading is not supposed to be adding to the overwhelm that you got going on in your life. That's not the case, which is why every single trade, my take profit and my stop loss is in the same place. In regards to these parameters, it's the exact same. My risk reward 1 to 3, not 1 to 2.9, 1 to 3 or better every single time. I created this system to where I don't have to put a whole lot of thought into it. I get to show up to the market as robotic as I possibly can so that I can maximize my wins as much as I can and minimize my losses. This trade right here, 4,580 pips. 4,580 pips win, okay? Just based off of our entry system. No thought. Is it 1 to 3? Yep, it's a 1 to 5. Almost a 1 to 6. We're going to round 1 to 5, okay? We're going to round down 1 to 5. Yes, I'm taking the trade. I'm not thinking about it. I've already done the work to say I need to be in this trade. Why am I still thinking? What is there to think about? Why am I thinking? I have done the work that I need to do. Let me go ahead and end this trade so I can make my coin. Now, you guys see that the market has not yet reached take profit. Okay, the market closed on Friday, but how far into profit did we get? Let's see. The market closed at the most 3,560 pips, And on Friday, it closed at 3,020 pips in profit. Now, I'm not ever going to tell you to hold a trade over the weekend. I'm not doing that because anything can happen over the weekend. We could open, market could open in the next 2 hours and 45 minutes and gap all the way down here. And because it's gapping past my stop loss, well, guess what? Now I'm in the trade well beyond where I'm supposed to be in it because it gapped below my stop loss, meaning it never actually touched my stop loss because the market was not open. I don't want to have to run the risk of putting up with that. So let's just not do that, okay? Unless you've identified as a swinger, and if you are swinging the Dow, then the amount of capital that you have needs to reflect you being able to swing Dow Jones, all right? Now, let's go down to the 5-minute time frame so that we can look at some of the exact same quote unquote moves in regards to how we are following the system while we are following it in that way. All right. Now we're in a 5-minute time frame. It's a lot easier to see all of that consolidation on a smaller time frame than it is on a larger one. All of this right here is a whole lot of noise. All of it. All of this is an easy place for liquidity grabs. All of it. Like, let me just come and take your money because you're so impatient that you don't know how to wait. And because you don't know how to wait, I'm going to play on you not knowing how to wait. I'm going to play on you just having to be in a trade. I'm going to play on all of that. I'm going to play on the fact that you are still dealing with the fear of missing out. So let me just take your money. We don't want to have to put up with that. We don't want to deal with that. All right. Because this impulse right here is so large. This is Thursday at 2:55, by the way. So I would have already been out of the market. But because this impulse is so large, again, we right back to my fibs. I'm going to use my fibs. I'm just going to drag them all the way across. Why am I doing that? Look at the market. Let's move this big box. Look at the market. Look at this. We had a break and retest of 618. The first bullish break and bullish retest of 618. What happened after that? The market took off. We finally broke consolidation. Or even here, a bearish break and retest. What happened? The market took off to the downside. Bearish break and retest of what? 0.618. What do we know about 0.618? We know that at the level 0.618, that the trend has become weakened. This is why it is important for you to know these fib levels. What typically happens at the 50 consolidation? If you don't believe me, go and use your fibs and see what happens depending on the trend that you are magnifying, and see if not, at the 50%, the market consolidates. Anything below that, we know the trend is stronger. Anything above that, we know the trend is weakened. And because the Dow is notoriously bullish, we know that anytime we see these counter trends, that what do we want to do? We want to maximize on the actual move of the market. Even if the Dow is trending downward, right? We have this counter trend going on. We know that that's not the true trend of the market. So what do we want to do? We want to stay ready so that we can maximize when the market corrects itself. We can maximize on the market continuing its actual movement and not get so thrown off by the retracements. A lot of times the market is not reversing, at least not with the Dow. It is more so retracing so that we can get those retests and then the market can take off in the way that it needs to. So that is a big thing that I would have utilized in this area to be able to place my trade. Even here, let's just zoom in a little bit just to show you that it works for shorting the market also, okay? We have a new starting point here, all right? We have an evening star that formed, okay? Then we have this small retracement, 5 minutes, followed by what? A bearish engulfing candle, okay? I would have utilized my fibs from the high to the low of that candle. Then I would have used my short positioning tool. And then I would have measured out negative 618, 0.618. I'm looking for a 1 to 3 risk to reward ratio. Oh, it's close. 2.79. I'm not going to take the trade. Let me show you following through with my risk to reward ratio system. I would not have lost 140 pips or 14 points. 5 minutes later, this trade would have hit my stop loss. 5 minutes later, it would have hit my stop loss. Now, do we lose trades? Absolutely, but I'm not taking a loss I don't have to have. So, okay, cool. Now 1 to 3, I'm not going to take the trade. Let's put on another setup. Okay, we got another bearish engulfing candle. 10 minutes later, do the exact same thing. I'm going to measure fully my bearish engulfing candle, utilize my short positioning tool. I'm going to find my stop loss, and then I'm going to find my take profit. And we're going to do the exact same thing. Is this a 1-to-3 risk to reward ratio? It is. It's a 1-to-4. Now, looking at this on the back end, we know it would have lost that trade of 200 pips. We would have went into profit a little bit, hit the initial area TP1 of -27. But you guys know I'm a full take profit or stop loss type of person. For some of you, you're okay with pulling a trade at -27. I'm not. At the most, I will close partials at -27. That's about it. Otherwise, I am going to trade the full gamut, negative or my stop loss to take profit. And that's it. That's what I'm doing every single time. So you guys have to go into the market and you got to work your muscle, even when we have this system going on right here to where, or this momentum rather, to where the market is just consolidating. You have to know, how do I still maneuver? What do I do? Do I still take trades? Do I not take trades? How long is it, or how long does it make sense for me to sit on my hands? Do I have the right knowledge to be able to see through when the market is consolidated? You don't know until you go and study the market in those ways so that you can better identify when the market is doing it. How do I capitalize on it so I don't get caught in it? That is the biggest part. Even here, we got all of this bullish momentum, and then the market slows with a bearish engulfing candle. Okay, now I want to see a pullback of some sort, followed by a bearish engulfing candle. Guess what? We got that. We got that bearish engulfing candle right here. From here, I'm going to use my short positioning tool all over again to -618 for my take profit, 0.618 for my stop loss. Boom, I have a 1-to-3 risk to reward ratio. I'm taking the trade if it is within my trading time. Now, you guys' trading time may look different from mine, but ultimately, I'm taking this trade. 19-point stop with a 62-point or reward potential. I'm taking the trade. The trade would have hit my take profit. I'm in the trade. It works just as well for shorts as it does for going long in the market. But you guys got to make sure that you are coming in here, studying the market, knowing when to sit on your hands, knowing when those moves are about to take place, developing your trading edge further. It's not going to get developed just because you're like, oh, I don't know what to do when the market does that. I know you don't. That's why we come to the market, so that we can get better, like riding the bike, tying our shoes, changing that baby's diaper when the baby laying in your lap, and they got all kind of stuff coming out their butt, and you trying to keep it from getting all on whatever you sitting on and all over yourself. With practice, you get better. Making the bottle in the middle of the night with one eye halfway open and the other one completely closed, but knowing that your baby got a very well shaken bottle and they were put to bed with a full belly. You didn't think you could do that before. You didn't think you had the capacity to do that before. And what do you know? With time, what happened? With practice, what happened? You ain't just say, well, Lord, because I've never done that before, I guess, I guess I ain't gonna be able to do that in the middle of the night for my child. No, you figured it out. You figured out what worked. You trial and error, trial and error, trial and error, and you figured it out. That same exact thing is very prevalent in the market. I wasn't always day trading in this capacity, but guess what? Through trial and error and trial and error and trial and error, I came up with a 4-step system. Once I realized, oh snap, every time I come and study, these same things are happening. Granted, the candlesticks may look a little bit different, but the same things are happening a lot of the time. Let me try that and see what happens. Oh snap, I'm losing less. Oh snap, I'm losing less trades. And on the trades that I do lose, I'm losing less money. Oh God, this gotta be it. Through trial and error. Nothing in the market intimidates me anymore. News doesn't scare me. Consolidation does not scare me. A slowed market doesn't scare me, but that is with practice. I used to be like, you know what? I am not trading NFP week in general. And I'm like, dang, well, if I'm not going to trade NFP week, if I'm not going to trade CPI week, when am I going to trade? Because on the other weeks, we got high impact news. On the other weeks, our homeboy Powell is talking crazy. And if y'all don't know who that is, I'm telling you, when the market do something, when the market do something insane, most of the time it's your boy speaking. Okay, that most of the time that's what's happening. He's speaking, and when he does, anything is bound to happen in the market. So you got to think about that. If I'm fearful of when these fundamental things are happening, I'm scared of NFP week. I'm scared of CPI week. I'm scared when there's high impact news in the market. I'm scared when our homeboy Powell goes, I don't even want him to say, hey, and I'm in the market. If I'm always fearful of these things, at what point exactly are you day trading? None. So instead of you running away from those hard times in the market or the times that you think are hard and run toward understanding them better, a lot will change. We need fundamentals in the market. Most of the time, these fundamentals give us the corrections that we've been waiting on. So don't run from them, embrace them because they're not going anywhere, and figure out how you're going to implement them in the way that you understand the market. How are you going to implement them with the system that you follow, and watch the trajectory of your trading journey change? Embrace all of it. The wins, the losses, the break evens. Embrace it all and watch it change. That is my homework to you guys for this week. There will be a submission link where you can submit your homework, where I can look over it, where you can break down the market and say, hey, I would have done X, Y, and Z in this area because of X, Y, and Z. I want you to utilize the verbiage like you're professional, because you are. It doesn't matter if you're doing this part-time. Do you know how many people don't even know what they're looking at when they look at this? Don't even know where to start. They don't know what buttons to press. They don't know what words to utilize. Nothing. And you do. Count it as a blessing. You have something so powerful at your fingertips. Count that thing as a blessing. Maximize on it as best as you possibly can and run it up. Okay? Run that thing up. All right, you guys. Again, there's going to be a submission link. We can submit that homework. There's also going to be a Q&A link where you can submit your questions and we can get it popping. All of the questions that you guys submit, I sit down just like this and give you a video response so you can hear my voice and see me and watch me maneuver through the market. That way you can go and replicate that exact thing in the way that you best understand. So until next Tuesday's session or next Sunday, not Tuesday, until next Sunday's session on System School.